While global attention often focuses on competition between China and the United States, another power has been expanding rapidly across Africa. The United Arab Emirates is building a network of ports, logistics hubs, mines, farms, and renewable energy projects stretching from the Atlantic coast to the Red Sea. DP World operates or develops major port facilities in Senegal, Somaliland, and Tanzania. Abu Dhabi Ports Group has expanded into several African markets, including a new dry bulk terminal concession at the port of Douala in Cameroon. Emirati investors have entered Zambia's copper industry, while Masdar and other companies are pursuing renewable energy projects across the continent. According to a Financial Times investigation, UAE entities have announced African investments valued at more than $168 billion since 2017. That figure needs an important qualification. It represents announced and planned investments, not simply money already spent or projects already completed. Even so, the scale of the strategy is significant. Why is a relatively small Gulf state investing so aggressively in Africa? The answer lies in a combination of commercial opportunity, food security, critical minerals, maritime trade routes, and long-term geopolitical influence. Why the UAE is expanding? The UAE built much of its global influence by turning oil wealth into international businesses. Dubai became a major center for aviation, finance, and logistics. Abu Dhabi accumulated enormous investment capital. Companies such as DP World, AD Ports Group, Masdar, and International Holding Company expanded far beyond the Gulf. These companies operate commercially, but many of the sectors they target are also strategically important. A port determines how goods enter and leave a country. A logistics corridor shapes how minerals and agricultural products reach world markets. A copper mine provides access to a metal essential for electrification. Agricultural projects can strengthen food security for a desert country with limited farmland and water. The UAE's African investments, therefore, should not be viewed as isolated projects. Together, they form a network. Ports and strategic corridors? Ports sit at the center of this strategy. In Senegal, DP World operates the container terminal at Dakar and is developing the port of Ndayane. In Somaliland, it operates Berbera, located near one of the world's most important maritime routes. In Tanzania, DP World operates part of the port of Dar es Salaam, a gateway serving not only Tanzania but also landlocked countries further inland. In February 2026, Abu Dhabi Ports Group joined a 30-year concession to develop and operate a new dry bulk terminal at the port of Douala in Cameroon. The terminal is designed to handle commodities including fertilizer, grain, clinker, and gypsum. Because Douala also serves landlocked Central African economies, the project has regional importance. Foreign investment can improve African ports by bringing capital, equipment, digital systems, and operational expertise. But ports are strategic national assets. A concession lasting 20 or 30 years can influence tariffs, employment, expansion decisions, and access to logistics data for an entire generation. The key question is therefore not whether African ports need investment. They clearly do. The question is whether the contracts create enough value for African economies. A modern port becomes more developmental when it supports local factories, African-owned logistics companies, regional trade, and productive industries. If it mainly improves the movement of imported goods and raw exports, the infrastructure may become more efficient without changing the underlying economic structure. Mining and critical minerals. The UAE is also moving into African mining. International Resources Holding, connected to Abu Dhabi's International Holding Company, acquired a majority interest in Zambia's Mopani copper mines, alongside a major investment commitment. Copper is essential for power grids, electric vehicles, buildings, renewable energy systems, and digital infrastructure. For Zambia, new capital can help revive production, protect jobs, and increase exports. For the UAE, the investment creates access to a strategically important mineral, but mining deals should be judged by more than the amount of ore extracted. African governments need to ask whether foreign investment will support processing, local procurement, technical training, and manufacturing. Zambia could export copper and earn revenue, or it could use copper as the foundation for industries producing cables, transformers, electrical equipment, and other higher value products. The second path creates deeper development. Foreign competition for African minerals gives producers leverage, but that leverage is wasted when countries negotiate separately, offer excessive concessions, or fail to demand local capability. Food security and renewable energy. Agriculture is another part of the UAE's strategy. The Emirates have limited arable land and scarce fresh water, so food security is a national priority. African countries possess large areas of agricultural land and significant production potential. Emirati investment can bring irrigation, storage, processing, cold chains, and access to export markets. But it can also create conflict if land rights are weak, water is diverted from local communities, or food is exported from regions where people remain food insecure. African governments should therefore ensure that agricultural deals strengthen local food systems, rather than only serving external demand. Renewable energy presents a similar opportunity. Masdar has pursued major clean energy investments across Africa. The continent needs capital for solar, wind, storage, and transmission infrastructure. But a solar farm is not automatically industrialization. If most equipment is imported, specialized skills remain foreign, and electricity primarily serves mines or export industries. The wider developmental impact can remain limited. Energy projects should therefore include local training, grid expansion, and opportunities for African companies to participate in operation and maintenance. Horn of Africa and Sudan. The UAE's presence becomes particularly sensitive around the Red Sea and the Horn of Africa. Berbera sits close to strategic shipping routes linking the Indian Ocean, the Red Sea, and the Suez Canal. The port also offers a potential alternative trade route for landlocked Ethiopia. But Somaliland's political status makes the project controversial. Somalia's federal government has disputed agreements concluded directly with Somaliland. This demonstrates how commercial infrastructure can become geopolitical. Sudan presents an even more serious controversy. Since war began in 2023 between the Sudanese armed forces and the Rapid Support Forces, Sudanese authorities and other observers have accused the UAE of supporting the RSF. The UAE strongly denies providing military support and says its role focuses on humanitarian assistance and diplomacy. The allegations remain serious and should be presented with clear attribution. Dubai's role as a major global gold trading center has also raised questions about the traceability of African gold, including material connected to conflict zones. The lesson for Africa is clear. Commercial networks involving ports, minerals, and commodity trading cannot always be separated from politics and security. The UAE has a strategy for Africa. African governments, therefore, need equally clear strategies when negotiating with Emirati companies. First, large investment announcements should be converted into enforceable implementation schedules. Second, contracts should contain measurable local employment and advancement targets. Third, procurement should create opportunities for genuine African companies rather than politically connected intermediaries. Fourth, technology and operational knowledge should be transferred to universities, technical institutes, and local firms. Fifth, ports and logistics corridors should support African manufacturing and regional trade. Sixth, mining investment should encourage economically viable processing and higher value production. Seventh, agricultural projects must protect land rights, water and domestic food security. And finally, concession terms, government guarantees, and major tax incentives should be transparent. Foreign capital is not the problem, weak negotiation is. UAE's expansion across Africa creates two possible futures. In the first, foreign companies operate more ports, mines, farms, and energy projects. African commodities move more efficiently, but most advanced functions, profits, and decision-making remain external. The continent becomes better connected to the world while remaining primarily a supplier of raw materials and strategic assets. In the second, African governments use foreign competition to build domestic capability. Ports support industrial zones, mining supports processing and manufacturing, renewable energy powers factories and communities. Agriculture strengthens local food systems. Engineers and managers gain advanced skills. Local companies enter supply chains. The difference between these futures will not be determined by the nationality of the investor. It will be determined by the quality of African governance and negotiation. The UAE has become one of the most important external economic powers operating in Africa. Its companies are investing in ports, mining, agriculture, renewable energy, and strategic trade corridors. The UAE is pursuing clear national interests. Commercial returns, secure supply chains, critical resources, food security, and global influence. There is nothing unusual about a country pursuing its interests. The real question is whether African countries are pursuing theirs with the same discipline. Africa needs investment. It needs efficient ports, dependable electricity, productive farms, and capital for industry. But investment should not be confused automatically with development. A port is not industrialization unless African businesses can use it to produce and export more valuable goods. A copper mine is not transformation unless the resource helps build skills and industries. A solar project is not energy justice if communities remain disconnected. The UAE has a strategy for Africa. The urgent challenge is for Africa to have a strong strategy for dealing with the UAE. Will Emirati investment help build powerful African industries and infrastructure, or mainly strengthen foreign-controlled supply chains? Share your view in the comments and subscribe to Africa Power Watch for more documentaries on the investments, resources, and geopolitical struggles shaping Africa's future.